Dear viewers, the year 2022 is going to be a different year for the stock markets across the globe. Now in the month of January, starting from the mid of January, the stock markets across globe started correcting. It has created a panic at the moment across the globe. In this video, we are going to examine what could be in the store. Is it something right? Is it something wrong? And what has happened in the past and what is that you need to be doing or expecting from here onwards. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, investment consultant and a financial planner.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, starting from 17th of January, the stock markets across the globe started correcting and started feeling the tremors. It was not a routine correction that we experienced. Market fell as if falling from a cliff. They started falling with extreme ferocity. Sensex, which was at 61,000, dropped down to a level of 57,000 in no matter of time. In the United States, Dow Jones, which was at about 37,000 levels, has dropped down to 34,000. Both Dow Jones and the Indian Sensex lost about 9% in a week's time. The Nasdaq, which was at a peak of 16,200, the prior peak, has lost much more than these two indices. It came down to a level of 13,000, which means to say it lost over 20% of its valuation in a week's time. Markets are in a correction mode at the moment. Is it something new? It is not something new. But how do we say markets are correcting? The indication whether it's a correction or whether it is a routine wave pattern can be seen from how much markets have fallen or where the moving averages are. Now, in case of Dow Jones and Sensex, both the valuations are very close to the 200-day moving average. In case of Nasdaq, the moving average is well below the 200-day moving average. When the valuation of an index is below 200-day moving average, it is said that the markets have entered the bear phase. In case of Nasdaq, the 200-day moving average is in the range of 14,500 levels. Currently, Nasdaq at the time of recording this video is at a level of about 13,000. Nasdaq is in a bear territory. Sensex and Dow Jones are just around that particular level, and probably in a week from now, they may drift down further on. Markets correcting down is not something which is a rare phenomenon. Prices will go up, prices will come down. Wave patterns are always there in the market. But this kind of a falling by a great amount each and every day, and in a short span of time, markets retracing by 8%, 10% is a rarity. This is something which we call it as falling from the cliff, or markets falling down like a rock from the hill. Such kind of a fall happens because of a reason. It will not happen without any reason. Now, we all know that the stock markets have been going up and up and up without correcting in a proper way. It was creating a bubble kind of a territory. Now this bubble has burst, or it is about to burst, or what levels it will correct from here, we do not know. Only history will answer what kind of a crash is this. Probably this burst will be known as the fintech bubble burst going forward. In the year 2000, we had a similar bubble burst. It was called the dot-com burst because the markets moved because of the excessive valuation of companies which had a dot-com as the names with them. Right now, yes, every stock is moving up, but most of the time it is the fintech companies which are quoting an astronomical valuation, and these are the companies which have corrected. Now, if you look at the Indian scenarios, you see companies like Zomato which have lost more than 20%. You see companies like Nykaa which have lost a lot of valuation. Likewise, across the globe, it is the fintech companies which have lost a great deal of valuation. Probably history will remember this particular crash as a fintech bubble burst. In the stock market, booms and busts will follow like seasons. There are periods of booms, there are periods of bust. This is the longest phase I have observed. I have been in the market for over 3 decades now. There was a gap of such a big, huge gap between the two busts that happened. One is 2007-8, and that's down the memory lane. That's close to about 13-14 years behind us now. After that, we are heading in another direction of a deep correction, or you can say a crash. Is there a difference between a deep correction and a crash? There is no description around it. If the corrections take you to a level of about 20%, you can say it is about a deep correction. But if the corrections take you beyond this, 30, 40, 50% kind of a thing, then you can say it could be a crash. It happened in 1992 during Harshad Mehta period, where the markets corrected by about 50%. During 2000, during dot-com bust, the markets corrected by close to 50%, but it happened over 3 years' time. In 2007-8, when the markets corrected, they corrected by literally 60%. 21,000 was the highest value on the stock market. When the market started correcting, in about 10 months from the start of the crash, markets retraced to a level of about 8,000 on the Sensex. That's roughly about 60% of the valuations market lost during such a crash. So such deep corrections which are beyond 20% can be regarded as a market crash. Are we heading towards a deep correction? Are we heading towards a crash? I do not know the answer. Only the weeks, months ahead could give an answer for this. But the corrections which have set in now has all indications to suggest that we might go much more than a deep correction. Between 2007 and 8 and the current the correction mode what we are seeing, there was one another incident which happened in 2020 February to April period. At that point of time, the Sensex moved back from 40,000 level to 27,000 level, which is about 30%. But that was a reaction. It was not market falling on its weight. There was a pandemic, a roadblock was hit. Nobody knew what is going to remain there from further onwards. As a result of that, as a reaction, markets literally collapsed in less than 2 months. But that is an exception. Immediately after that, because of the corrective measures taken by the various central banks and the governments, markets rallied from there. But this correction is something which is different from that. In 2020, February-April period, markets corrected as a response to pandemic. But today, when the markets are correcting because of excessive weight of the market. It's a top-heavy market which is coming down right now. In 2020, when the markets came down, markets were bolstered by injection of huge liquidity by the central banks. Now, this liquidity has resulted in a bubble in various asset classes. It's just not the stock market which are experiencing the bubbles at the moment. The bubbles are seen in real estate in the developed world. Bubbles are seen in the commodity space as well. Now, because of this, if you are following the news, you would see US still has an interest rate which is closer to zero, whereas on-ground inflation in US is at 7% level. That's unimaginatively high. The government, the central bank of US is concerned about this. They reacted for this particular sticky inflation which they are seeing on the ground, and they indicated that they are going to withdraw the liquidity as quickly as possible, and central bank has said that they will withdraw all the liquidity by March this year. If the markets were being pushed ahead, it's because of the liquidity. That liquidity is taken out. Likewise, the interests are at 0% level. So this is giving an opportunity for everyone to bet on the market, take risk, and it is creating a bubble. Now the central bank has said that they are going to increase the interest rate 4 times in this year, which means to say, one, liquidity is being drained out. Second thing, the money is going to become more expensive. So fueling of money into the stock market is going to come down. So if markets have gone up because of the liquidity, markets are coming down because of suction of liquidity which is happening. One another reason why markets went was because of the retail frenzy. It was very easy to invest in stock markets with the help of apps, Robinhood investors, and all youngsters. These guys didn't have any prior experience. They had money in their hands. They borrowed money. They leveraged. It became very easy for them to invest in the stock market. As a result, the bubble got created. Now, when the markets correct, this retail frenzy will come down. People will lose heart. People will get fear struck. Already they owe money to the banks for the real estate or for borrowing if they have borrowed for investing in the stocks. And this deleveraging of balance sheets of the retail crowd also has to happen, and it could take years before this. As a result of that, the stock markets correcting from here onwards quite deep is real. When markets correct, there could be two types of corrections which will follow. One is the price correction, what you are seeing now. The prices have moved too high. Somewhere they have to come back to the mean. It is called the reversion of mean, that it should come back. Sometimes what happens is, if the prices have moved up too high, the recoil will bring down the price much lower than where they should really belong to. Whether this crash will result in such a kind of a phenomena, right now we don't know the answer, but a possibility distinctly exists. The recoil can take it much lower than the long-term averages. That's a possibility. Another possibility is a time correction. A time correction is when the market starts correcting. For the prices to reflect the correct valuation of the market, they have to spend time. The economy has to catch up. If the retail has to come back, they have to deleverage the balance sheets. So all these things will take time. So markets can spend months together, and in cases they can spend years together before the prices will start heading upwards all over again. So this is called the time correction. So both price correction and time correction can happen simultaneously in the present circumstances. That brings to the question, how much more the markets can fall from here onwards. I have no idea what markets will do. But based on the judgment, what I have seen in the last 3 decades in the stock market, what I can say is that the correction is not over. You may see pullbacks in between. We have lost close to about 9% on Sensex and Dow Jones in last 1 week, and 20% or so on the Nasdaq. There is much more correction which will happen. This correction will not happen in 1 day or 1 week or 2 weeks, because this is also involves a time correction. Now in the bull market, you have seen an upward wave pattern in a bull market. That means when the markets are climbing up, they give a wave pattern, they make higher tops and the higher bottoms. When the markets are correcting and coming down, they will again depict the same wave pattern. But this time, whenever the pullback comes, they will make lower tops and the lower bottom. Each wave takes it to a slightly lower higher point, but brings down the index to a much lower level. So 4 or 5 waves like that which will happen, and the correction could be over probably in a few months' time, or maybe 2 or 3 years. All possibilities exist. One thing I am absolutely clear is this correction will result in spending of time. If you are thinking that the markets will cross the previous highs anytime in a hurry, maybe 1 month, 2 months, that is not going to happen. It will take time. Only after spending sufficient enough time for the economy to catch up and the deleveraging of the balance sheets, then only a new attempt to cross the previous highs will happen, and distinctly that will take more time. This correction, in my personal opinion, we can easily see around 20% from the peak. We have already half the way down. Probably next few months or maybe a year or two can bring it down by another 10-15% down from here onwards, and that's a distinct possibility. Because markets are correcting, should you be worried? Or who should be worried because of the correction? If you are a long-term investor, if you are working under the guidance of a financial planner, the professional ones, the ones with integrity, you have nothing to worry about. If you have invested here for an intention to look at your investment 10, 15, 20 years down the line, you have nothing to worry about these corrections at all. In fact, if you are investing through a SIP route, in case if you are investing through regular monthly contribution into the stock market, through any investment, be it the small case, be it the ULIPs or whichever one, you have nothing to worry about. But there are people who have to be worried about this. If you are a person who has come to the stock market in the last 1 year and you have pumped in a lot of money, then you have to be worried about losing the money permanently. That's a distinct possibility. If you are a person who is investing directly in the stocks and you have picked up some penny stocks and you have picked up some stocks because the prices are cheap, and if you have picked up a stock which is not part of an index, then you losing money is very much real. If your portfolio has most of small caps or mid caps or micro caps, then you may have to settle with lower valuations for a long time to come. But if you have constructed your portfolios in a scientific way, in a professional way, you are guided, or if you have read and you have created this, you have nothing to worry about. Like every other crash, this crash will also teach a lesson to a lot of people. These will never come back to the stock markets again, because they came to the stock markets at the fag end of the bull market, and that will leave bruises on them, and they will never trust the stock markets again at all. Dear viewers, I would like to hear from you. What is the state of stock markets today? What do you think? Where will the stock markets be heading to? Will there be a crash? If there is a crash, to what extent the stock markets can retrace? What is your opinion on that? I would like to hear from you. I'll be waiting for your comments. Please comment below. Dear viewers, I have told through this video my observation about market and what might possibly happen going forward into the future. If it helped you to understand the dynamics of the stock market or gave an indication of what might happen in the future, please like this video. Nevertheless, no one knows what can happen in the stock market. We can all give a judgment, we can all give a prediction, but market has a mind of its own. It will do what it needs to do. It doesn't care anything about what we opine about that. By the way, if you are a person who is watching this channel for the first time, or if you are yet to subscribe for this channel, please hit the subscribe button and press the bell icon. Don't forget to share these videos with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another video, yet another topic very soon.
Press the bell icon for more details and subscribe our channel.